Okay? All right. Cool. So I hope you enjoy that. So, yeah, so right now, if you're thinking up, you're thinking this. If you're thinking down, your belief system is telling you, or your filter is telling you, that this is your resistance and that's where you look to sell. So I forgot now who was it, FT9 that sold here, and I'm like, that's too early. You're on the first touch, and that's a bit of a bet. When you buy at support or sell at resistance, and you're like, I bet you it's going to hold, it's dangerous. Now it often works, but that doesn't necessarily make it right. So if you're betting that this is going to hold, I'd rather you be long here. Because there's always a pullback. You see this wick and that real body? There's a pullback in there. So I'd rather you kind of buy the pop, right? In this case, I don't want you to sell here. I want this to come down first and then sell the route, right? Sell it that way. No, I know you didn't really, right? I know you didn't. I'm making a lesson out of it, of course, FT9. But it's still, right? There's still a finesse that needs to be displayed. And it's I get it. With the psych level of 18, it's very much doable. But if you get this on a longer term trade, okay, you're going to get this. So another sort of message I'm not just giving you, FT9, but everybody, is that this is a step up and you're being terribly aggressive to sell a step up. What you want to sell is a step down because it's a technical indication of a lower high. So you don't want to sell a higher high, even if you're at resistance and even if it's a roll reversal. I get all that. But if you're trading something that's going to fall for the next few days, the next few weeks, or whatever, you can afford to wait. Okay? And if this is a day trade, you're just a little bit aggressive, that's all. I mean, this has clearly made a higher high, so you don't sell higher highs, you sell lower highs. No, FT9's been around for a while. Oh yeah. So right, I'm saying there's some patience right. There may be aggressive is all I'm saying. I'm not saying it's wrong, but it's a bit aggressive. Yeah. No. FT9's fine. Okay. So I get the price, but I think the time is off. Okay? Okay. So remember, it's not you don't want to measure everything by a trade basis because you get into situations where you sell it and you make money and then you're out and then you do something else. What I'd rather you do is start by confirming, if you're a bear, the trend. And then knowing, right, giving yourself permission to confirm these longer term moves so that you can be in it for longer. That you don't have to be on the first touch, because that's how that works, right? So you're at resistance, you're at price, you're at roll reversal, whatever you want to call it. Everything's good there, but you don't have to be on that first touch. Okay? Okay? So I think if it rolls over now in New York, it'll be very interesting, because what we want to do by tomorrow, we need to pull this further down. So even another way to kind of make the same comment, just from a different point of view, if it was so bearish, tomorrow's pivot should be lower, right? We should be looking at this by now. And we're not. You see what I mean? So anyways, hope it works out for you. Aussie. So like this one is another example of being correct, but being dangerously early or dangerously aggressive. Okay, so I want to be a bull on this. Okay, so you know this, right? I'm a bull. Okay, cool. So you know I want to buy. The second thing is, this is my bullish buy zone. So I definitely want to buy somewhere in here. And this is my daily M3, and I definitely want to buy there. And I'm sure I could fib this and argue that it's a 50%. I could throw down a huge argument there for all kinds of things, right? It's early. Okay? It's early. Now, you can scalp in here for sure, eh? But you still have to recognize that you're right. Well, everything is good here. Okay? So it comes down to like a risk tolerance. I think the way you should look at this is if you truly have a trend, and I want you to think about this, what I'm saying, okay? If you're truly trading a trend, so does that mean scalping? Does that mean spot trading? No, but all of those things tend to be better when you trade with a trend. So if you're right on this as a bull, and there's a trend, it's going to go up more than a day, right? It's going to be bullish for more than a day. Maybe a week, maybe a month, maybe a year, maybe a decade. But more than a day, for crying out loud, right? So therefore, you can trade this, but in the beginning, because we have a step down, I want you to trade it as a bull, because remember, this is a 50%, there's a roll reverse, there's a bunch of things going on here. So you can be a bull, but I want you to look at it and say, you recognize that you're early, you recognize that you're aggressive, and the way that you temper your enthusiasm is to go small and treat it like an intraday scalping spot type trade with maybe some conviction for holding it longer. So that's basically what FT9 did on the other pair to the downside. Okay? Where you're like, as a bull, this is pretty obvious. Okay? So you're long and strong. Okay? And then you can do it this way as well. I mean, you can change it off the 5-minute chart, and I can give you an hourly candle either way. Okay? And you're tiptoeing on this higher, but you know you're going to be challenged here. And until you breach that, technically, you're a bit early. Because technically, I wouldn't call this bullish until we're above this. Cool? So what you should be doing now is identifying this, and maybe New York comes up, and then tomorrow this comes down, and then tomorrow you buy it, and you take it north. And after that, we have a confirmed, right, series of higher lows and a series of higher highs. Okay? So that's what I call by when I say maybe you want to tiptoe into it. But I just wanted to make that point that right, like managing the risk and entering the trade with the risk in mind is important, or simply waiting a little bit, knowing that if this is going to be long, then you know it's going to be long for a while. You don't have to be the first one in. Aisha says, you mean it's too early to buy? No, it's, what I'm saying is there are multiple time frames. And with every time frame, there's a different risk associated with this. So looking at the move on this, so I'm looking at daily pivots. This is a buy zone up here. Well, we're clearly below the buy zone. And then the new buy zone is down here. So on sort of like medium term, this is not bullish. No matter what you want to argue, on the medium term, this ain't bullish. And I'm a bull. Okay? You understand? So does it mean you cannot buy? No, it means you're buying on the medium term something that is not in an uptrend. So you can buy it, but you're being aggressive because you're saying, oh, even though it's a downtrend, I'm right. Well, that sounds like a guess. I bet you I'm right. No one's interested in your bet. Okay? And if you are correct, it goes up. If you're basing that on some sort of technical analysis or fundamental analysis that would create a trend, it's going to be higher highs and higher lows on this chart, multiple higher highs and higher lows. Like the next chart will have the green up here, and the new buy zone will be higher. See, I'd rather you buy the higher buy zone than buying the drop in the buy zone, right? This is a step down. I'd rather you kind of get more confident when this happens. So in here, I'm isolating where we are now to be different from where we want to be in the future. And therefore, you can buy this. It's totally fine. But your mental reasoning or your emotional confidence should be different than buying up here. Okay? So therefore, you're scalping long in something that is technically currently a downtrend, and you're participating in turning this around to be an uptrend. That's cool. Just realize you're scalping against current market conditions. You can totally do that. But what a lot of people just do is they buy it here because it's an M2, and they're done. And they're like, yeah, I'm swing trading this. Well, I've never once said you should swing trade against the trend. That's not something I preach. Right? So that can't be a swing trade if we're technically on this time frame at least, right? So I'm just looking at yesterday versus today. Now you might be looking on this, on weekly charts and say, oh, well, Wayne, you're crazy. If you look at a weekly chart, well, dude, I'm on a 5-minute chart. You're on a weekly chart. Obviously, there's not going to be congruency. But if you're right on your weekly chart, then I can wait for my 5-minute chart to find congruency, and then I can start trading. You see? So if this is medium term down, then yes, you can scalp this long. Okay? And then once you get this chart to turn bullish, which means a higher high, higher low scenario, then now you can swing. So you can scalp and spot into your swing into your position, and your position into the lifestyle you want to live. Okay? Okay, so it's a multiple time frame analysis, and it shows you the difference between a position trade, a swing trade, right? A spot trade, let's say, and a scalp. Okay, this is probably a scalp. Okay, we're in here. This is like, it's more of a London Open. spot trade, and then tomorrow, if we get that, that's going to be a swing trade, and then if you can maintain that for weeks or months, and then it's a position trade. Okay. 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 So if this, okay, here's the conservative target for today. If Aussie dollar goes up to that spot today, this is going to rise to probably here, and these targets are going to rise up to here, and your trade plan for tomorrow will look like this. And the interesting thing is that could happen in New York, in Asia, or London Open. We don't know. That's why you got to do your job. Okay? But if you get this, it's a swing trade. Why is it a swing trade? Let me back out even further. Back to where we started. You have a bigger trade plan. What's your bigger trade plan? This, this, and this. Okay? That's my swing. Okay? So now, what I'm suggesting is on a sort of a day trade, spot trade scenario. If you buy this tomorrow at London Open, you're now in that trade. You're now in your swing trade, but you took it on a daily pivot. After we created a bounce near support, a higher high, higher low, buy the dip, not the drop. There's a difference. Buy the dip, not the drop. See the difference? This thing dropped. Okay? This thing dropped off the central pivot. That's exactly where a bear would sell it. And so it tanked. It dropped from 72 to 71. That's not a good buy until you have some confirmation. Okay? And now you're buying this dip, not this drop. Okay? Don't trade against the machine. So what you're really setting up now is this. Okay? But to do that, you got to look at it multiple time frames. Aren't the yen pairs? I'm not talking about that on. I'm talking about this. I'm talking about technical analysis. Okay? So whether the dollar pairs are better than USD pair or yen pairs, that's not what I'm discussing. And there isn't better, ever. There's just different. Okay? Now, I'd like to see a weak dollar. It makes sense to me. So, okay? This makes sense to me. This makes sense to me. Okay? Okay? So even on this hourly chart, you see how, statistically speaking, it's still down? Wouldn't it be great if tomorrow my price action pivots were north and we were in a scenario like this? That's kind of what I'm saying here. I understand the buy, but I'd like market conditions to be different. I'd like the slope to be positive. All those things, okay? There's lots of little lessons in there. I hope it helps. So maybe